back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. But let's bring in our next guest for our cash tag segment, and that's going to be Landon Swan, the co-founder of LikeFolio. Thanks for joining us, Landon.
Appreciate it, Tom. Thank you.
All right, so we're talking food delivery. Disclosure. I don't use these things anymore. They're way too expensive. I looked at some data points on, buying $20 worth of food through DoorDash, and it equates to about $35 after tip and fees and all that other stuff. Are people still using this? I thought, the pandemic's basically over. People still using these services because the fees just seem astronomical.
Right. It kind of reminds me of Airbnb, right? It says it's a $200 night, and then you get out of there for $450 after cleaning. It's incredible.
Right.
But no, people are still using it. Actually, I think that obviously the pandemic caused a fantastic opportunity for these companies, and there's been some pullback because once restaurants actually started opening up. But this is a growing segment, and there's a lot of stickiness to it. Once a lot of people started using it, many of them stuck around. And what's really interesting is to see the sort of the shift in the different companies, who's dominating and who's not. If you go back to 2017, DoorDash was about 10% of mentions. But if you look at it now, they're close to 2/3 of mentions in this space. They have absolutely taken over, completely dominated the competition. And really, it's been Uber's failing. I mean, they had the slam dunk opportunity to take control of this market share with the dominance that they have in ride sharing, but they completely failed. So you can see here on these charts, if you look at where we were a year ago versus today, DoorDash was 60% a year ago. Now they're 65, 66%. And most of it has come at the expense of Postmates. Postmates has really fallen off a cliff. Uber bought them, but it doesn't seem to be a fantastic investment. It looks pretty bad, actually. And Postmates is really falling off quite a bit at their expense, but DoorDash is picking up a little bit of that. Even Uber, I guess maybe they're shifting some people over. And then Grubhub, that's the one that's kind of got everyone talking. Like I never thought, if you would have told me, a month ago, that when we talked about food delivery, that Grubhub would be one of the main topics, but Amazon has made them one of the main topics. They took a 2% stake. And if you look at, here's the mention spread right now. DoorDash is about, 7 times as many mentions of Grubhub. Typically, yesterday they were about even. So this news has actually brought a lot of people's attention to Grubhub. And what Amazon's offering for Prime customers is a basically free delivery for Grubhub. And so that is, obviously, that's going to be scary for DoorDash and its investors. So I'm a little bit concerned there. It seemed, other than that news, it seemed like DoorDash was on the path to complete domination, huge gains in every area, and just taking out the competition. Even though Uber is like the ride-sharing company, I mean, they've got the what you might call a proprietary eponym, where they are the brand. Like it's like Coke and Band-Aid and Google. Those are the terms that everybody uses just with everything. And Uber's one of them, but it's not for food delivery. I would argue that. To DoorDash, something is becoming more in that category than Uber is. So concerned for Uber, definitely not bullish on them. And you can see on this scatter chart, Grubhub in the top right there doing well. DoorDash over to the right also doing well with growth, not as happy of customers. Grubhub actually has the happiest customers. Postmates completely falling off a cliff off to the left, and Uber Eats also negative. There on the left side of that dashed line is negative and very, very low happiness. I mean, just 35% happiness is atrocious. That's like Spirit Airlines kind of numbers. So DoorDash doing well. Grubhub is the threat. But how many times have we talked about Amazon disrupting and dominating, and they just didn't do it? It was Whole Foods. We were going to knock out Kroger and destroy grocery stores, and then when they were doing their own deliveries, UPS and FedEx were dead. None of that happened. So I'm a little concerned for DoorDash because of the investment that Amazon's put into Grubhub, but it's only 2% of the company. They didn't buy it out completely, and they have a history of being more, a little bit more, what's the saying with dogs? Their bark's louder than their bite. I'd like to see them dominate before I get real scared, because they just didn't do it with grocery or delivery. So Right now, I love where DoorDash is at, off 72% from highs. I mean, this stock is way, way down, but they are dominant in their space. Uber's only down about 57% from highs. So I like where DoorDash is at as an investment from here, and I do think that they have what it takes to continue domination and grow their market share.
All right, guys, follow my story, Landon. If you wake up in the morning and Jim Cantori from the Weather Channel is standing on your front lawn, you're about to have a bad day, right? So if you wake up in the morning and Amazon has entered your business, it's very similar. You're about to have a bad day because what they're going to attack is a middleman and they're going to attack your margins, right? And Tom, here's a word you can deal with in terms of delivery: free. Free delivery, Tom. There's one even Tom White can handle. Free. And so you're right. Right now, the way that the structure of delivery is set up, DoorDash is dominant. That could change really quickly, Landon, as you know, because one thing where Grubhub may fit in more with Amazon Business than some of the other names you mentioned, they deliver things. Amazon delivers things on a daily basis, and they just bought into a company and got involved with a company that delivers things as well. So this could be a game changer for them. And if I'll bet you showed me the 2021 pie chart, you showed me the 2022 pie chart, I'll bet you the 2023 pie chart is going to look different, and Grubhub is going to be much different player. So this is one of those interesting turn of events here. DoorDash is clearly dominant, but there's a new player coming out, and they've got big pockets behind them, Landon. I'd like to know what you think this is going to look like in 2023, Landon.
Yeah, I mean, so look, they did a pretty small investment, right? They didn't buy Grubhub completely.
Yep.
I'd really like to get a look at that deal, or if I'm not sure if they did it on the open market or if it was a deal. What's the non-compete? I wouldn't be surprised as Amazon is learning the business to do their own, because 2% is a pretty small stake. And so who knows, it might be Grubhub, it might be Amazon as the big grower next year. But again, go back to Whole Foods and how we thought that was going to just destroy Kroger, and even shipping to a lesser degree for FedEx and UPS. It didn't happen. And so, yes, if I was management at DoorDash, I would be scared. Of course, you have to be scared when Amazon gets into your space. But history tells me that, maybe they've got such a big business with everything else that they do, and they don't seem to be able to just, plug themselves into a new market and dominate instantly. So that's what would keep me being able to sleep a little bit at night if I was a DoorDash CEO. But again, where the valuation is right now, with them being off so much and the dominance that they have shown, I'd be bullish moving forward, even with this news. I would be slamming the table, a month ago before this news. Now I'd be like, yeah, I'm still bullish a little bit, a little concerned about Amazon, but not like scared to death. Again, 2% investment is just not that big. Now, if they go all in, if they buy Grubhub completely or they launch their own line, then I get much more fearful.
Yeah, but I think dipping their toes into this segment, Landon, probably just makes it a clear path to probably get involved more as far as Amazon goes on the Grubhub side of it, especially if they see that opportunity there. But when I look at the purchase intent versus sentiment on this stuff, on that scatter chart that you had, you want to be in the upper right-hand side where you have positive sentiment and you have growth there. DoorDash doesn't have positive sentiment that much. It's actually a little bit below Postmates on this one. So if that equates to, and I mentioned this before, I did like this breakdown of it. The lowest commission possible is 15% that DoorDash charges. So if you have a $20 bill, it gets to $34.50 after fees, a 20% tip, and more fees by DoorDash. So if you look at that as a percentage, that if people or the consumer are having problems with inflationary pressures, this would be one of the first things they wipe out, isn't it? And especially with low positive sentiment data that you guys are showing for DoorDash.
You're absolutely right. I mean, this is one thing that with their Dash Pass subscription, I think is going to be a little bit, it's going to be on the chopping blocks, right? People are cutting subscriptions left and right when it comes to streaming and things like that. So why wouldn't this be one? It's going to be the power users who are going to keep it. and get their money's worth. But the people that aren't sure are probably Amazon Prime members already, like almost all of us are, right? So they're going to have a free subscription from Grubhub. Can Grubhub handle that volume? I don't know. What's going to happen to their happiness? I don't know. That's going to be a lot of influx. But you're right. I think the longer term threat is more concerning, just the fact that Amazon's dipping its toes in, and it may put up a larger stake of Grubhub. It may launch its own. I'm not sure. The other silver lining potentially is that, if DoorDash does struggle and the market share comes down, but they still have, they have the large customer base, maybe they could be the acquisition target. It's a bit of a stretch, but there's always the fact that Amazon's getting into your space. That blade cuts both ways. So there's opportunity as well as threat. Again, much more bullish before this news than now. I love this company. I think it's undervalued where it's at, but Amazon, it does make me tap the brakes a little bit.
And also with the fact that, they still don't make money. The stock's down,
Right.
basically about 52% this year. So still positive on DoorDash moving forward, even though they've always got that underlying M&A activity that could potentially be there where somebody takes them out. And I think that's what stockholders or shareholders look at a lot of times. But you're still relatively positive on DoorDash here?
I think so. Long term, they've got to figure out the profitability, but I think a lot of it has to do with automated cars. Once you stop paying drivers, you're going to make money. I don't know how many years away we are for that, and then you've got a whole new slew of entrants that could come into the market. But if you're the dominant player, if you control the market with the most members, then you're going to have an advantage going into that. It's just, can they hold that lead? They've been expanding it, but now we've got a new big boy in town, so we'll see if they can continue to grow it.
All right, great stuff. As always, Landon, appreciate it.
Thanks, guys. Take care.
All right, that's Landon Swan, co-founder of LikeFolio, breaking down the data on delivery.